This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Right then, so hopefully you've gone through and had a look at the study text you've chosen tuition provider to get yourself a little bit further along in terms of the translation of the overseas subsidiary. Okay, we're now going to go through and complete this example that we have here to bring it all together. Okay, we're not going to do the full consolidation because you don't need to within the exam. You will need to have to do extracts from the consolidation. So here we're going to be looking at some calculations of figures that appear within your position statement for your December 15 year end for Goodwill. Post-acquisition reserves. Oh, there's a bonus. We've done that already, haven't we? Okay, so we calculated that as 15 million. If you don't believe me, there it is. Okay, that figure there, that 15 million. We then need to work out the non-controlling interest, so your NCI, so your standard working 4 if you like, and then your group retained earnings, your standard working 5. Okay, excellent. So what have we got? Well, let's go through there and have a look at your Goodwill. Remember, the Goodwill, we work in our overseas currency and then translate it at the closing rate, don't we? So we look there at the fair value of the consideration, which we will want in millions of dinars, to which we then add on the non-controlling interest. Now there, the non-controlling interest, we need to check how that is valued based on your proportionate share of net assets method. So we own 80%, the NCI own 20% of the net assets. We then need to go through there and deduct your net asset to acquisition. Okay, and those net asset to acquisition, where do they come from? It's magic, isn't it? It's from that new working that we worked out before, wasn't it? Okay, so if we add 350 and the 150, does that give us 500? That will go through there and give us the net asset to acquisition. The fair value of the consideration is there as 760 million. So we've now got all the information that we need. We've got 760 million fair value of the consideration. The net assets are there at 500. And then the NCI is 20% of 500. Okay, so does that give me 100? So what you've got there is the entire subsidiary is worth 860 less the 500 is that 360. Okay, 360, we're going to translate that there at the closing rate. Closing rate was 4.3. Does that give me, on rounding, $83.7 million? Okay, there we go. So that figure there would appear on the group statement of financial position, smack bang on the face of it within non-current assets. Okay. We then need to go through there and work out the non-controlling interest. Okay, so when we're going through there and looking at the non-controlling interest, you start off, don't you, with your non-controlling interest. Is it their acquisition? Now just be careful, because we are looking at this in millions of dollars. So here the non-controlling interest was there at 100, wasn't it? At acquisition, we used the 3.8 rate. Okay, so here we've got the NCI acquisition, but that's in millions of dinars. We need then to work it out at acquisition, so that's using your historic rate, isn't it? So 100 divided by the 3.8, does that work out? Is it at 26.3, to which we then add on 20% of the post-acquisition of 15, which is there as 3, a nice round 3. Okay, I won't total it up just yet because I just want to go through and just finish off bits and pieces to do with the group retained earnings. Because on the group retained earnings, we've got, is it 100% of the parent? Now let me see if we can find the group retained earnings. 100% of the parent. I have to go back a little bit further. 100% of the parent retained earnings, is it there at 110? Let's just check. Yeah, it is. Okay, quick check on my answer. To which we then add on 80% of the post-acquisition. So again, remember, we're in millions of dollars. So is that there as 12? Okay. 80% of 15 is there as 12. Now, this is where we just need to be a little bit careful, a little bit conscious, because what we said before, if I go back to our working, which I think was here, the reason why this post-acquisition figure is a balancing figure is because that contains all the gains and losses on translation of the assets and liabilities of the subsidiary. We don't want to have to calculate them. We just want to group them in with that post-acquisition movement. So when we've taken our share, the 80%, and the NCI share, 20% of that 15, we've put in the NCI share and our share of any exchange gains and losses through retained earnings and through NCI. There's just an issue. The issue that you've got is that's just looking at the assets and liabilities on the face of the statement of financial position of the subsidiary. What about that other asset that will have been translated that hasn't seen any gains or losses up to now? Okay, we've just put in the goodwill at 83.7 million. Okay, well, what would that initially have been translated at when we acquired that subsidiary? Okay, well, 360 divided by the 3.8, the goodwill would have been there initially at the 94.7 million. Okay, so if that's the case, it's now at 83.7. So the goodwill has fallen. There's been a reduction in the goodwill. So therefore, there's been a loss. A loss of how much? $11 million. Okay. Now that loss needs to be allocated to the parent and the NCI. Is it the NCI? This is where you've got to be really careful. This is why it gets really hard. I told you the basic rules are really straightforward in terms of the translation, but the application, bonkers. Okay, so here what you've got is the goodwill, isn't it? Key bit is that we used the proportionate share of net assets method, didn't we, to value the NCI. So that goodwill is the partial goodwill. So if that's the case, then that $360 million is P's share only. And if that's the case, then this loss of 360 million must also then be attributable to the parent only. Okay, if it was the full goodwill method, then the goodwill will include not just the parent but the NCI share of the goodwill as well, and therefore any exchange difference would need to be split between the NCI and the parent. Here it doesn't, because it is the partial goodwill. It goes entirely to the parent and therefore into the retained earnings. So you've got there your exchange loss on goodwill, which is there as 11. So I can total up there. Does that give me $111 million? And then on the NCI, no, not 111, 121. Careful. Wow, imagine. Let's just check my calculator. No. I think I was right first time. Yeah, 111. Okay. Let's put it back in. Okay, there we go. Always use your calculator. Don't take shortcuts. You'll make mistakes. I didn't, but then I thought I did. Why? Because I didn't use my calculator. But there we go. Anyway, moving on to the NCI. The NCI that you've got there. There's no exchange difference on your goodwill because we're using the partial goodwill method only. So totaling that up gives you there $29.3 million. Okay. There we go. Wow. How tough and challenging is that? Very. Okay. Not only do you have to do the calculations, you may have to explain it. Oof. Okay, that's where the challenge lies. So start thinking about putting into words what you've done in terms of what you're translating, or what rate it is, in terms of where the exchange differences come from with regards to your goodwill. It will prove a challenge, but I don't think that will crop up all that regularly. It'll be once every so often that I think your overseas subsidiary and consolidation will appear within that first question within the exam. Okay, so again, what I do is I would practice working some more questions, work your way through that. We still haven't finished everything just yet. We need to go through and look at how we calculate the exchange differences overall within our financial statement. So what goes through other comprehensive income, because at the moment we've taken a bit of a shortcut. We've cheated a little bit by saying that all of the exchange differences on the net assets effectively are contained within that 15 million post-acquisition figure. So practice some questions, work it through, take a break, come back, and then we'll finish it all off with a bang.